So now you know a little bit about research in terms of successful and not so successful stocks. Now let's talk strategy. First, we're going to talk about risk. The risk of a stock and the potential return that stock may earn are positively correlated. This means the higher the risk, the likely chance of a higher return. Past performance is a good indicator to how risky a stock may be depending on how it has performed in the past and where it may go in the future. The opposite of high risk is low risk. The lower the risk a stock may incur, chances are the return on that stock will also be lower. The time horizon in which you're investing to is an important piece of information in terms of investment strategy. Because remember, you've only got 6 weeks to invest in the stock market simulation. Another investment strategy to consider is not putting all your eggs in one basket. An example of this would be investing in Pepsi and Coca-Cola, as they are both in the beverage industry. A diversified portfolio has a better chance of an increased rate of return versus a portfolio that has all its eggs in one basket.
I like to purchase stocks in the technology sector and invest in things like smartphones, tablets, and laptops. Is it a bad idea to buy into only one industry?
That's a good question. One positive benefit of putting all your eggs in one basket is industry trends. If an industry is trending positively over the last number of weeks, it may be a good idea to put all your eggs in one basket, particularly considering you only have 6 weeks to invest in the stock market simulation. The next investment strategy I'll speak to is the buy low, sell high strategy. Timing is everything when it comes to investing in the stock market. You want to be able to get a good sense of how a stock is trending. If it's trending on the high side, it may be a good time to sell to retain that value. On the other hand, if a stock is at a particular low point, it may be a good time to buy and get in. What's in the news? Successful investors do their research before investing in a particular stock. It's important to pay close attention to today's current events. Keep in mind, things like the weather, an environmental record, and competition in the marketplace can have a positive or negative impact on an organization's stock price.
Like the oil spill in the Gulf of Mexico?
Exactly. You probably wouldn't want to invest in the oil industry after a disaster like that happens. Current price versus historical high and low. Analyzing a stock's current price or value versus where it has performed in the past may be a good indicator as to where a stock is headed in the future. A historically strong performer may have taken a dip recently in terms of its stock price. However, this doesn't necessarily mean it's not a strong stock to purchase. It's a good stock to keep an eye on if historically it's performed well over the long term. What are your personal interests? Stock investing is much like anything else in life. If you have a personal interest in it, chances are you're going to keep a closer eye and follow it more closely. Good examples may include if you enjoy clothes, electronics, the internet and technology. These are things, if you take a personal interest in, may be something to consider as you build your stock portfolio.
You mean I could own part of Facebook? Sweet.
That's right. For myself personally, I enjoy investing in Canadian homegrown companies. You want to wave the Canadian flag any chance you get, and a good Canadian company that's doing well is always a good investment. In this video, we've learned about investment strategies. High risk. The riskier the investment, the higher the expected return. Low risk. The less risk in an investment, the lower the expected return. All eggs in one basket. Try not to focus on companies that are competing in the same industry. Buy low, sell high. Based on how a stock is trending, determine the best time to get in and get out. Current price versus historical high-low. Analyzing a stock's price versus its past performance. What's in the news? Stay on top of current events and keep on top of factors that may affect a stock. Now that you know a little bit more about investing, go back to this week's Stars and Dogs and decide whether you want to invest in the profiled companies or not.